Okay, so I've been sitting here for a minute trying to figure out a catchy way to start this video, but I can't really think of anything. So just sit there and listen up, and thank you so much for watching. If you want the info, then you'll stick around. If you don't, then bye-bye. Alright, let's get into it. A couple days ago, I made a video talking about how the Fed is probably going to have to continue raising rates, and just because we saw a 0.0% inflation month over month in July doesn't mean that the Fed is going to be able to pivot, and this doesn't mean that the bear market is over yet. For one thing, we did get core inflation continuing to rise month over month, and we would have got headline inflation continuing to rise as well if we didn't see gasoline coming down 11% month over month in July. But what happens if we continue to see gas go back up in prices? A couple of months ago, we did get a decline in month over month inflation, but it went back up right after that, and that could definitely happen again right here as well. I mean, for one thing, the government did just pass this Inflation Production Act. the Inflation Reduction Act. This act means that they're going to continue pumping out billions of dollars in printed money at the time when we're seeing inflation near its highest in 40 years. And while it could possibly put infrastructure in place to make energy prices come down in the future, for right now it's definitely going to continue making inflation go higher because inflation is always a monetary problem. Also, everybody's been excited because the US dollar has been going down, and that means that usually whenever the US dollar goes down, assets go up in price, obviously, and that's why we've been seeing a rebound in Bitcoin and the rest of cryptocurrency. Also the S&P 500. But what you might not know, and you probably should know, is that whenever the dollar goes down in price, that just means that it takes more of those dollars to actually buy something, and that's why it goes up in value. And that's true for all things, including commodities, like the prices of gas and oil. And looking at this heat map, you can definitely see that there's green across pretty much the whole board here. If oil goes up, obviously gas is made of oil, and that means that inflation can continue to rise. Also, looking here at the dollar, you can see that it's in a bull flag formation, which means that it could definitely pop higher from here. Right here we have the daily chart for the US oil futures, and as you can see, it is in this downtrend, but if we see this popping a little bit higher right here, then you can bet that inflation is going to continue to rise, and that's another big reason why we're going to continue seeing the Fed doing rate hikes. And they're not going to be pausing or slowing down anytime soon, because if they don't get this inflation under control, then it's going to be a stagflationary environment just like the 70s, and they're not going to have really anything to do to get it under control. I've heard more and more people starting to say that the Fed is going to be pulling off a soft landing and that we're not going to be seeing a recession, and I went over in my last video about why we are definitely in a recession, but looking here at the 10-year minus the 2-year treasury, or the yield curve, as you can see, it has started to steepen, and they haven't marked that we're in officially a recession yet. But we definitely are, and this doesn't mean that we're going to be avoiding a recession seeing this yield curve steepening like this, because if you go back and look at every time that it has inverted in the past, it usually does uninvert or start steepening again before we are officially declared in a recession by the government, which is indicated by this gray bar right here. As you can see, usually it'll invert, and then a few months later, or maybe even a year later, it will be in a recession, and at that time, the yield curve might not even be inverted. Going back here, if I zoom out, you can see that this is a pattern that continues to repeat itself over and over throughout time, and this means that we are definitely going to continue seeing a recession in the future, but it's probably going to be a lot worse than any that we've seen recently, because as you can see, the yield curve did invert farther than it has even since April of 2000 during the dot-com bubble crash. Whenever we see a recession, we're going to be seeing earnings going way down, and that is going to lead to a further decline in the S&P 500 and pretty much crypto and all markets basically. Especially if we do see the dollar continuing to climb, because that means that it's going to take more dollars because they're worth more to buy assets, and that's going to drive the prices down in dollar values. For now, it looks like we are in a bear market rally, and like I said in my last video, it could go all the way up until the September meeting with the Fed, because people are going to be speculating that they're going to be pivoting, I think, and until at least we see that CPI reading right before the Fed meeting, we are probably going to be seeing a rally in the market, unless we get overextended here. And to see if we are getting overextended, let's go ahead and look at some charts. Looking back over here at the US dollar, or the Dixie, you can see that the RSI is not really getting overextended to the downside, but the MACD is starting to converge in on itself, and that means that it could start to head higher a little bit here. Also, as you can see, it does have this bullish divergence. It is starting to form right here. It's not confirmed yet, because if this does come down here and make a lower low like the RSI has, then it definitely could continue to the downside, but I think it has a long way to go, and I think that it's more likely that the RSI will get down here into the oversold territory before the price actually comes down here and makes a lower low below this previous low of about 100. Also, this is a bull flag right here, and usually how you predict these is you take the height of the flagpole right here and extend it from the breakout point, and if you would say that this right here is the flagpole and not this whole piece right here, then it looks like we could have a price target if we break out right now of about 111. If the dollar breaks out and starts heading higher, this is going to put downward pressure on all of the markets, including cryptocurrency, and that could definitely send us heading lower and possibly even making lower lows. Right here we have the daily chart for Bitcoin, and as you can see, a lot of people have been saying we've been seeing this parabolic curve, which if it is that, then we're definitely going to need to break above this upward trending resistance line to make any legs higher. And if we don't, then we could be topping out here and heading lower to the bottom of this trading range. And then if we break below that, we could be coming back down to about $20,000 before we find any support. If Bitcoin does break above this upward trending resistance line right here, though, I think we could be coming up to about $30,000, where we did have a level of support back here that will probably turn back into resistance. And then if we get rejected there, then we could come back down and try to find a lower high here, possibly hitting this upward trending resistance line and turning it into support. But if we continue to break through $30,000, then I think we could be coming back up here to fight with the 200-day moving average. And if we do finally get over the 200-day moving average, then I'm going to start flipping bullish. But I think we still have a lot of big battles before we get there, and we're going to probably be getting rejected and going back down, especially if the dollar continues higher. The RSI doesn't have very much room to head to the upside here before it gets into the overbought territory, and it does look like it's starting to get overextended and could definitely come down for a rejection here. This is coinciding perfectly with this upward trending resistance line, and if it doesn't get above this, then definitely look out because we could be coming back down to $20,000 like I said. Looking here at the Ethereum chart, you can see that it's definitely in the overbought territory here on the RSI, and it also looks to be trading within this rising wedge, which is definitely a retracement signal, and it means that it is probably going to be breaking down to the downside. If it does that, then the price target for a rising wedge is the bottom of the wedge, and that could be bringing us down to about $1,000 again, meaning that it could have a dip of about 50%. A lot of people have been getting really excited about this pump because it is about a 100% pump, but as you can see on this longer term time scale, you can see that we haven't made really any higher highs, and if we do get rejected here, then we could be coming back down to the bottom of this trading channel that we've been trading within since the top of the market. That would bring us down for a lower low, about $500 possibly even, and that would be pretty crazy. But if we do head back down for lower lows, then I think we could be looking at possibly even our last dump, because if the Fed does continue to raise rates and the inflation does actually continue to go down, then we are going to be reaching the bottom of the market here pretty soon, and eventually the Fed is going to have to be accommodative again. I just think that it's a little bit too early for us to be jumping the gun and expecting that we're going to be going into a full-on bull market again. Looking back over here at the Bitcoin chart, there is a pretty great argument to be made that this is an upward or rising wedge as well, and not a parabolic curve, meaning that we could possibly not even have another leg up and we could be coming back down to the bottom of the wedge real soon. Also, really looking here at any chart, you can see that we haven't really made any significant higher highs. This has been a really great relief rally, but it looks like it could be topping out and being overextended on almost every chart, and this could mean that we're going to be having a rejection and coming back down, especially because everybody on almost every video is saying that it looks like the bear market is over and it looks like we're going bullish again, and I just feel like everybody's getting too bullish and that we're probably going to be having a little bit of a rejection here, and then it's probably going to represent some really great buying opportunities, because whenever we do go into a bear market like this, traditionally we don't just have a V-shaped recovery and go straight to all-time highs again. We start having a little bit of a relief rally here, and then we'll come back down and double tap the bottom again and then level out and find a real solid floor before we start going back into a solid bull market again. I know this video was a little bit rough, and I'm sorry, I didn't really have anything planned. I just saw all this stuff in the markets, and I figured you guys really probably wanted to know instead of getting swept up in the euphoria of all of these people saying that the bull market is back on. In my opinion, I just think that everybody's getting a little bit too bullish, and I don't necessarily think that we could be going down to make new lower lows. It is definitely possible, but I think that we definitely haven't made a solid enough floor to start going back up to all-time highs yet, and we're probably going to have to trade sideways maybe over a few months or maybe even over a couple of years. And I think that, like I've been saying in the past, we definitely need to see inflation have solid evidence that it's coming down to a sustainable level, and that the Fed is actually going to pivot instead of just people speculating about the market. Let me know in the comments if you guys want more rough off the cuff videos just like this with what I'm really thinking about the market. Either way, thank you guys so much for watching. I hope you have a wonderful day, and don't forget to hit that like button. I'll see you guys next time. Bye.